specific investment objectives, financial situation, or particular needs of any particular person. Just take note that this presentation is purely of my opinion and not of IG's. Okay, perfect. So what do we have in the markets right now? Let me just cover a bit on fundamentals, yeah? Now, I mean, we had almost like they call it the worst start to the year, isn't it? You look at the Chinese market, the S&P, the DAX. In fact, all the markets have been plunging for the first 2-3 weeks of the year. And a lot of market participants are a bit worried. Okay, I mean, as traders or investors, you got to understand that the dynamics of the market is shifting a bit. That's why it's going to be messy. It's going to be painful. What do you mean by the dynamics of the market? Now, we had a rally for the past 4 or 5 years after the GFC, all right, the financial crisis in 2008, 2009. But right now, the market is adjusting itself because it used to be, the main catalyst used to be central bank liquidity, all right? Whenever the central bank pump in liquidity, whenever they do quantitative easing, whenever they slash interest rates, the markets will rally. So it's very straightforward, okay, very, very straightforward. But right now it's a bit different, okay? A lot of some of the central banks, like the Fed, has ran its course in terms of quantitative easing. They've ended it, and they are trying to hike rates because the economy is so-called improving in their own perspective. You got other central banks doing the opposite, like the ECB, like the BOJ, like the PBOC, the China Central Bank. All these, they're doing opposite. They're trying to pump liquidity into the markets and trying to support it. Okay, so the whether more liquidity will support the markets or will cause it to rally and break new highs, we've yet to see. Okay, we've yet to see. But we are going through adjustment period, and a lot of investors and market participants are trying to find a new catalyst for optimism. Okay, where will the optimism come from? And it's not helping that oil prices are, are crashing. All right, a lot of commodities, oil prices are just crumbling. Okay, simply, oil is the main thing is a supply-demand issue. There's just too much supply, and with the Iran sanctions leaving now, there's just too much supply in the market, and there's not enough demand, especially China. The main source of growth for the global economy is slowing down a lot as well. Okay, so oil has been plummeting all the way to $20, $30. A lot of my clients, a lot of traders are asking me, why is it that when oil prices are so low, isn't it good for economies? Any of you ask yourself that question before? Why low oil prices? Shouldn't it be good for the economy? Why is it bad? Why is the market so worried about low oil prices? I mean, if you ask, thanks, Ben. I mean, one thing is prevent inflation from increasing, but the first thing is sentiment. Okay, whenever oil prices plunge, people are worried. It shows that there's not enough demand for it. It shows that there's not enough growth, or like what Ben said, it shows that it's deflation, or a deflationary scenario for a lot of global economy, especially China, because all eyes are on China right now. So that's the first reason. The second reason is that although oil prices does not necessarily means that it will be passed on to the normal retailers or consumers out there, okay? Because a lot of the emerging markets actually take away the oil subsidies, add taxes to consumption, so it does not trickle down to the retail consumer out there. The second reason, okay? So for them, it's no big deal whether oil prices drop or not much a big deal, all right? And the third reason is that the whole world is, I'll say a lot of consumer, a lot of people out there are running on leverage, on debt. Okay, they're more concerned about their own balance sheet. And if you look at the US, for example, yes, and employment figures have got better, unemployment rate went down, more NFP being printed, but the wages is a big concern. Okay, wages is still stagnant. And without an increase in wages, people are not willing to spend. So that's why it's linked to the point number 2, whereby even though if oil prices were to come down, they are not willing to spend. Okay, so those are a few reasons why low oil prices does not really help the economy. In any case, I mean, it's more of a sentiment play, and it's just making a lot of market participants fearful about what's going to happen. All right, that's why you see all these combination of factors cause the market to drop quite a bit. Okay, so in this adjustment period, as traders, all right, it's good to be a trader. Might not be that good to be an investor, but for me, it's good to be a trader because for trading, you can long and you can short. All right, but the key thing is the where to long, where to short. That's where I come in here to hopefully help you make some sense of the market. All right, so that's a bit of my 2 cents worth when it comes to the fundamental side of things. But when it comes to trading, I'm a pure technical trader because I believe that it's very important to use the charts to guide you, not your bias, not what the analysts say on TV, because all this can be lagging. It can be a long-term view, can be a long-term analysis, but the charts. Okay, I'm a price action trader. I always follow the charts. All right, that's the main thing that I do. All right, so let's move on. I see some new faces. Let me just go through one slide that I always use before I start. Okay, so the whole point of using price action, I mean, I won't really go through a theory of price action. For that, you can attend seminars or some workshops I conduct. But the whole point of using price action is basically to label the market in 3 phases, whether it's been uptrend, downtrend, consolidation. And the reason why I want to label the markets is because I want to know what strategy to apply on it. Okay, I'm predominantly a trend trader. So if the market is going up, I would love to trade it upside. If it's going down, I trade it downside, and consolidation more often than not, I leave it alone. Okay, so I don't really focus on one market. I can trade commodities, I can trade FX, I can trade indices, but the main thing is I want to find the nicest trends, the easiest trades. All right, because I'm lazy. Okay, so because I'm lazy, I want to find the smartest trade. I want to know where the momentum is and just ride with the flow. Okay, it's so much easier like that. And if you look at the past 3 weeks, right, a lot of my clients, a lot of traders have been telling me that, oh, the market has dropped, it's really bad time to trade, blah, blah, blah. But I beg to differ, really, because when the markets drop like that, there's actually so many nice trends to trade. Do you guys agree? I mean, 2 weeks ago when I did my webinar, you guys can watch the recording on my website. 2 weeks ago when I did webinar, I was saying that the yens are where the trends are. You look at pound yen, dollar yen, kiwi yen, that's where the trends are. And it just continued. Okay, but right now we are in a bit of a different stage right now because it has hit key support levels. So if you want to continue shorting, just be a bit mindful. We might be making a bigger pullback. But for the past few weeks, if you look at pound yen, euro yen, kiwi yen, cat yen, all the yen pairs, we have really, really trended nicely. Indices side, same thing. China A50, Hang Seng, all these have been really, really nice trending markets to the downside. All right, so when the markets move like that, there's really a lot of nice trends. As a technical trader, there shouldn't be a reason why you could not catch a trend or why you miss a trend, unless you're a counter trend trader. Then it's a bit dangerous. Okay, it's not wrong being counter trend trader, but it's a bit more tricky. All right, you got to be very quick and decisive in terms of what you do. Okay, so using price action in terms of higher high, high low, lower high, lower lows, I use this. I use price action to determine what the market is doing. Okay, and then I try to find entries and things like that. All right, so enough of theory and fundamentals. Let's dive straight to the markets. All right, let's start with the SM. Okay, before I start now, in IG we have 3 different charting softwares that you can use. The first one is, of course, the IG terminal, the Pure Deal terminal. Okay, the second one is the Pro Real-Time chart, the advanced charts, which I normally use for my webinar. Okay, I like the advanced chart because it's really, really good for technical analysis. And we also have MT4. Now, MT4 can be useful in this, okay? I use my MT4 basically to scan the markets, all right? Now, because I'm using a new computer, I don't have my MT4 template with me, but let me just show you a quick run through of what I do, okay? So now, just imagine, let me just close all this, yeah? Okay, I have a chart here, Aussie dollar chart. So what I do is that I try to have different profiles. We could use MT4 profile, right? Okay, I try to have different profiles for different currencies. So for example, if I want a dollar profile, what I do is I take the Aussie dollar, I take the Euro dollar, I take the pound dollar, I take the Kiwi dollar. What else? Let me see. I take the dollar yen, I take the dollar cat. Okay, that's about it. So pound dollar, one more. Pound dollar and pound dollar. Okay. I thought this is quite useful, so I just deviate a bit before I go into the markets. Yeah, I take pound dollar. So what you do is that you can tile your windows like that, okay? And I actually did my own template, just a very simple template, and moving averages or whatever you want to. Okay, but let me just show you what I'm trying to do. Okay. Okay, I have it already on my old computer, but unfortunately the webinar software is not running properly there. So what I do is that for me, the daily chart is my main chart. All right, so I'll switch it all to a daily chart, zoom it out a bit. Okay, so now what I'm doing here is basically, once I open my MT4, I have, for example, this is a dollar scan. I have a look and see all the different dollar pairs that are out there. And like I say, I use price action, right? And I try to find the best trending market. So one look at all the dollar pairs, and all these are daily charts, you can easily tell which is the best trending markets. Okay, what do you guys think based on these 6 pairs here? Which one is the best trending one? Cable? Yep. Just gotta be a bit careful with cable right now because I think Kani is giving a testimony or giving a speech. Yep, cable, pound dollar. Yeah, exactly. Okay, I actually short pound dollar. When was it? This morning. I'll show you my trade plan later. Okay, I'm out of it. Okay, but you see, cable is a really nice trend. Dollar CAD is not bad as well, but at least it gives you a heads up of what's messy. You know that euro dollar is a bit messy. Aussie dollar is still in a downtrend to me. Okay, and dollar yen is slightly mixed because it made a new higher high. Okay, so what you can do is in the next webinar, in the next 2 weeks, I promise I'll show you my proper layout because I'll use my old computer again. But what you can do is that you can do a dollar scan, you can do a yen scan, you can do a cross currency scan. Cross currency means they are like Euro CAD, Pound CAD, Euro Kiwi, and things like that. You can do a Swiss scan. Depends on what you trade. Okay, but the main thing is to cut your time in terms of analysis. So what I do in the beginning of the week, because I don't trade, one of my rules is that I don't place trades on Mondays, right? So it cuts your time because one look and you can see, okay, which is the nicest trend. So for example, if I see euro dollar right now, there's no trends at all, so I ignore it. Okay, but what I can see that there's a clear 2 levels, 108 and 1.11, and maybe I set alarms there. Okay, you guys mentioned that pound dollar is a good trend for sure. So what you can do is that you can go into pound dollar, have a closer look, and then from there you can zoom in and try to plan a trade. Okay, you get what I mean? So I use MT4 more for scanning purposes. Once I see something that I like, I go to the pro real-time charts and zoom in and try to plan a trade. All right, so it's something that you can do, and then you can basically save the profile. Okay, save the profile under USD pairs, for example. Okay, it's just something I do, which I think is good to share. Something you can incorporate to your trading. It just makes your life easier. Okay, because sometimes when you turn on a computer, you see a big drop or big rally and you get so sucked in with your emotions and you just start trading the pair without having an overview. So I like to start my analysis with an overview. And then from there I zoom in and go into the details to plan the trade. Okay, so make use of all the platforms that's available to you. It's all free anyway, so use it. Okay, I like MT4 for scanning because it's not very resource intensive. I can put all the charts and the loading is really fast. All right, if you guys need any MT4 help, just feel free to email me or drop me a call. All right, so once you have a scan, right, let me just go to the charts right now. You guys got any questions? Okay, so let me start with indices first as usual. So now we have the S&P 500. Now what I have on the left and right is a weekly and daily chart. For me, I'm more towards the intraday to swing trader, so I look at the weekly and daily chart as reference. All right, but if you want shorter term charts, please shout out and I'll be more than happy to cover that. So now the S&P, we are at a key level now. Now if you look at the weekly chart, right, look at this level here. This is the 1850 level. And if you see many times when the market tried to break below it, we tried it in September 2014, we tried it in again September, November period 2015, and right now we're trying to do that again. Okay, so if you are still bearish on it, don't be an eager beaver and just keep shorting it. All right, we are near to support on the weekly chart. It is a long-term chart, but you need to be aware that we are near support. All right, so if you look at this candle over here, all right, this is a nice bullish pink candle. It shows that it is still supported. All right, so weekly chart to me, if you're planning a longer term trade to the downside, there's no trade unless we break below at least these 2 candle wicks here. Okay, 1850 is the key level, but the reason why I draw 2 lines here because this is the support zone you just got to be mindful of. All right, so any long-term trade plans like swing trade, like a couple of days, for me, there's not much of a trade plan here yet unless we make a clear break below. Okay, because I'll not be surprised if the market starts consolidating and hold and behold, we'll start pushing upwards like that. Okay, so the weekly chart, in fact, a lot of indices, if you look at the Dow Jones, if you look at the DAX, if you look at the CAC, it's quite similar. Nikkei as well. Okay, so let me just erase drawing. So this is the weekly chart for you. So weekly chart, it just goes to show that there's no trend, it's in the consolidating phase, and we are at support. How about the daily chart? Now, if you look at the daily chart, you can see that we have been a nice downtrend. Now, the downtrend started when we broke this low. See this level here? This near the 2000. The downtrend started here. It broke here. It made a nice pullback and then continued downward. So this is a nice downtrend. If you are trading it off the daily chart, beautiful. Okay, beautiful downtrend. But the downtrend, you can see that the bears are a bit tired now. If you look at this whole area here, you can see that we are consolidating a bit, because you see how many days of candles? 1, 2, 3, 4, 5, 6, 7, 8, 9. About 9 candles. The candles couldn't close below the 1860, 1850 level. All right, so it says something. It says something. So even if you took a short at this pullback, okay, yesterday we made a nice pullback around here, 1009 or so. Even if you take a short, this should be at least your first profit target. Okay, because it'll take some momentum to the downside to break it this level. Many times we have tested here for the past 2-3 years, could not break it. All right, so it's very important. Yeah, exactly, short, John. Don't short the support. So it's very important to always cross-reference the high-term time frame and see what's happening. Okay, so if you tell me that, hey, Nabil, there was an intraday trade yesterday, I took a short at around this 190 level, I say, bravo, good trade for you. That trade was actually on the 4-hour chart. Let me just show it to you. It was, where was it? 20, somewhere here. This was the resistance. So if you told me you took the trade around here, yep, decent level, but you got to be mindful of where we are right now. And you see a 4-hour chart is forming some kind of inverse head and shoulders. You see that? So a break above the 1920 level means that a bigger retracement. All right, so if you took a short there, just be very mindful in terms of the high-term time frames where we are. I would definitely take some profits, or not all of my profits here. Okay, but if it breaks below, if it clears 1850 nicely with a candle close below, I'm more than happy to join the downtrend again. All right, so that's the S&P analysis for you. Just be a bit more patient and see what's happening around these support levels. Okay, the momentum on the daily chart is still to the downside. However, we are weekly support, so I'm going to be patient on the S&P. All right. Now, next thing, the Dow Jones. Quite similar analysis on that. So if you see the Dow Jones weekly chart, the around the 16,000 level, you see the touches again in 2014 September, November period 2015, and where we are right now. Exactly the same. We have a bullish pink candle as well. So most of the weekly chart are at consolidation support levels, and if you look at divergence, right, this is a lower low, and on the MACD is a higher low. So there's a bit of a bullish divergence as well. Okay, so don't be too surprised if the market rallies the next week and push it higher. Okay, so just be a bit mindful. Now, if it clearly breaks below, okay, when I say clearly breaks below, let's go to the daily chart. Now, you see all the candle couldn't close below the 15,800 level. Now, if I see a daily candle close below the 15,800, I might look for a short right there. And I try to look for resistance on short-term charts and try to join the trend to the downside. But if we don't do that, I'm just going to stay on the sidelines. Okay, this is for the Dow Jones as well. So quite similar. I mean, if I go to the DAX, same story. Same story. Look at this 949500 level. You see all this support, these two lines I drew here? Okay. So same thing. In fact, the DAX is a bit narrower because the top and bottom, the range is still a bit more narrow. So for all these markets, again, if you look at the MACD, you look at this swing here as a double bottom, but the MACD is making a higher low. So that's a bullish divergence as well. Okay, so very similar analysis for all the indices. So just be a bit patient. Just be a bit patient if you're planning a short or planning trade to the downside. So that's the DAX for you. Let's see what's next. Okay, let's move on to Asia right now. Look at Nikkei. This two lines, see this level here, 16,500. All right, there's resistance, support, and right now it became support as well. It looks exactly like the DAX. It looks exactly like the DAX. But for the Nikkei, it seems a bit more bearish because it has made a lower low. Okay, and there's no divergence. You see, price make a lower low, MACD make a lower low, so no divergence there. But just be a bit mindful of this setup over here. Okay, there's a lot of multiple channel support levels. See the channel support, the horizontal visual support around the 16,000 to 16,500 level. All right, so if you're taking a swing to position trade, be a bit mindful. Again, I'm not surprised if you make a rally back to the top of the channel. But if it clears below the 16,000 level and the candle close below, then I'll be more convinced that we are breaking to the downside. Okay, so I'm just using price action to try to see what's up ahead. Okay, because when you see news on TV, normally it's just reporting what happened the previous day. All right, there's not much use to you, but price action gives you a heads up. So for example, the Nikkei, on the price action side of things, it gives me a heads up that we have made a lower low. Yes, there's the first sign that the downtrend might begin, a lower low. However, we are at support. So we need a clearer lower low below the support for me to be convinced that, hey, the downtrend is starting. I'm preparing my shorts. Yep. So that's Nikkei for you. So moving on to other Asia indices. Now, Hang Seng definitely looks more bearish than most of it. So let me take you to the Hang Seng weekly chart. Again, if I'm going too fast, if you've got any questions, please feel free to shout out. Yeah. So now, Hang Seng. First things first, we are in a nice downtrend. All right. You see this whole area here. This was the previous low. This was broken. Lower low, lower high compared to this high. And right now we have made another lower low. Okay. Key thing, this is a weekly chart. The key thing is this. There's a bit of bullish divergence here. Okay. And if you zoom out on the weekly chart, you notice this line that I drew here around the 18,800 to 19,000 level. There's a lot of previous support here as well. Okay. Which is why I'm more inclined to think that the Nikkei, we might make, even though we are on a downtrend, okay, even though we're on a downtrend, we might make a pullback to maybe back to 20,000 before we come down again. This is a possible scenario. Okay, so even though you find a nice trend in the market, you don't just short blindly. You need to plan the trade. You need to plan the trade. Okay, I'll be happy if it goes to 20,000. I see some form of change or trend on a lower time frame. I'm happy to take a shot from there. But right now, same thing. I'm on the sidelines for the Hang Seng as well. Okay, let's take a look at the daily charts. Let's see what's happening on the daily chart. All right, daily chart definitely very bearish. But if you look at the previous 6-7 days, again, consolidating. All right, I'll be very keen to see what happens when the market comes back here. And I like to take such retracement because it's still on a downtrend. All right, it's a very, very clear downtrend. All right, you see here, lower low. All right, lower high, another lower low. And right now we're finding a lower high. So I'm very keen to see what happens at near the 20,000 level. And I'll be happy to take a shot if the opportunity presents itself. First target will be the previous low. Okay, so the Hang Seng is definitely more bearish than the other indices. All right, same thing that you can say for the China A50. All right, look at the China A50, very nice lower low, lower high, and right now we have made a slight lower low here. Again, like the Hang Seng, there's a bit of a positive bullish divergence on the China A50. Okay, so I'll be a bit more mindful of shorting around here, but I'm waiting for a pullback. Now, pullback to where? Let's do the daily chart. Okay, the daily chart has just really fallen and made lower lows in here. I'm looking for a pullback, maybe back to the 9,000 level and see what happens. This is for China A50, around here. Okay, but I'm very mindful that this area here is the previous high. Okay, so it might go near the previous high from there, and then it might drop again. Again, my first target will be the previous low somewhere here. All right, so that's how I trade. I always look for the trend. I see whether we are, if I'm bearish, I look for resistance. If I'm bullish, I look for support. Okay, so for this case, because we are too close to support for the Hang Seng, for the China 50, for most of the indices, I'll be a bit more patient and just wait for it to come back to me. Okay, same thing. You can apply the same concept for the shorter term time frames. Yes, Ben, I mean, most markets are just consolidating. It's true, but I would say for the past 2 weeks, it has been really trending. I'm not sure how many of you took the yen shorts that I put up on Twitter and the shorts that I was discussing 2 weeks ago, but those were really, really nice trades, okay? The yen shorts. But in terms of this week, I think the market has hit key support levels and we just got to be patient, all right? Always be patient and look for the quality trades, all right? This is what I always say. So that's a Hang Seng for you. Let me move on to Singapore Blue Chip. Okay, this is one of the more bearish indices out there, yeah, compared to all the other index. Let me tell you why. Is Nancy here? This is Nancy's favorite, Singapore Blue Chip. So, okay, weekly chart. Now, look at this. I hope you guys understand why I said this is one of the more bearish ones. Look at the key 300 level here. It has taken out convincingly. Okay, right now the bearish momentum has stopped at 280. There's a bit of a bullish divergence as well. Now I can't see any support near the 280. Let me try to go to the monthly chart. We don't have enough data on the monthly chart. Sorry about that. Okay, but I hope you guys understand. You guys understand why I'm saying that this is one of the more bearish looking charts. Okay, because it has made a very definitive lower. Look at this. This is as clear as it gets when it comes to price action. All right, lower low compared to all these lows here. Lower high compared to this high and this high. Another lower low. Perfect. What I'm looking out for now is back to around this 300 to 310 level, and I'm happy to take a shot down at least back to the previous low of 280. All right, this is a classic textbook price action, lower lows and lower highs. Okay, this is in a weekly chart. Look at the daily chart, same thing. Look at all the candles here. So I don't have to zoom into a 4-hour chart, 1-hour chart, because I know they will be consolidating. Just looking at the daily candles. So again, I'm hoping the market push higher to about 300 before I take my shot. Now, sometimes when you plan a trade, you might say that, all right, I'm looking for a retracement to this level and I take my shot from there. But the next day when you look at your charts, the thing just drops like that. Okay, the thing just drops. What do you do? All right, what do you do? All right, the first thing is this. Not every trade plan will come true. You got to admit that not all your trade plan will come to you, okay? But if it breaks new low, that's where you need to ask yourself, are you going to continue to ride the trend to the downside? Or are you just going to be patient and see what happens, okay? Because the thing is this, when you're looking at long-term charts, right, especially daily and weekly charts, sometimes you might see that the candle is breaking below, all right? But if you're not careful, the thing might just bounce up and form a candle like that, like what we have done so far. Okay, so it's not wrong if it breaks clearly below to take a trade on the shorter term charts and 1 hour, 15 minutes to the downside, but just be mindful, okay? But if a daily candle closes below all this support level, then awesome. It means that the bears are still there. Okay, so not every trade plan will come to you, but that's why you need to be flexible and try to see whether you can join in the momentum or you still want to continue waiting. All right, there's no such thing as 100% in waiting, 100% in trading. Sometimes it happens to me whereby I want it to retrace to this level and it breaks a new level the next day. I'm still thinking that, okay, no, my risk to reward, my risk to reward is still not there. I'm looking to let it pull back more, and the whole thing just drops and drops and drops. It happens. You can't get all the trends, but it happens. Okay, so you need to know how to manage your expectations and your emotions when you trade. I mentioned this before, I think my previous webinars, but a lot my problem, my issues for the past in a couple of years back, right? My main issue was that I was a really good analyst, but I was a really bad trader. Okay, in fact, sometimes I still suffer from that. I'm not sure how many of you can empathize with me. You can be a good analyst, but when it comes to placing the trades, you really suck. For the lack of a better word, I'm sorry. So basically, and it gets so frustrating because your analysis can be spot on. You know, you can tell your friend, oh, pound dollar will hit 1.5 by my next week, and it really happened. But when your friend asks you, do you take the trade? Yes. Do you make money? No, I got stopped out. And then you'll be scratching your head. It's like, oh my goodness. I mean, if only somebody can trade for me, I just tell them the direction. Okay, there's a big difference. Okay, a really big difference between being a good analyst and good trader. It's not difficult being a good analyst. Okay, sitting down, conducting a webinar like that, you can do it. If you're really conscientious for the 6 months or 1 year, even if you're new to trading, you can really do a webinar if you want to, and you can predict. You probably out 7 or 8 out of 10 trades, you can probably predict the right direction if you use price action and trends. But in terms of placing trades, that's where the trader comes in, psychology, the risk to reward. There are many times where your analysis can be correct, but you do not enter the trade because there's no setup. The risk to reward is not there. Okay, so it's just part and parcel of trading. Okay, but being a good trader is much, much tougher than being a good analyst. So if you're new to trading, quickly be a good analyst first, find a strategy that suits you, and then for the next few years, you've got to just use the same strategy but focus on your psychology. Okay, there are other instruments out there if you think that your entries are always bad. All right? In fact, right now I'm introducing binaries into my trading because sometimes when I predict, I don't like to use the word predict, when I analyze the market correctly, when I think that pound yen is dropping, for example, but I just can't seem to find an entry on my charts, I switch to binary. Because binary, the entry is not important. All right, all you have to do is to understand the market and which level it will go to, whether it will end above or below this level, and the time. The main thing about binary is the time factor. So if you're a good analyst, I think your time factor should not be a problem. You can try looking at binaries. All right, just a bit of idea there. I'm starting to look at binaries this year. Yeah, it's not really a casino. I mean, you still need analysis, I would say. The only thing that the odds are set by the broker, so you just got to be, you just need to weigh your odds. That's the only thing. Okay, so okay, so that's the Singapore blue chip. So Singapore blue chip, I'm still bearish, but I'm looking for it to retrace next to the back to the 300 level. Then hopefully we'll drop from there. Okay, quite similar story for all the indices, but I think in terms of the most bearish indices, I would say Singapore blue chip, Hang Seng, China 850, those are looking better to the downside. All right. Okay, any other questions on indices before I move on to FX? Okay. All right, thanks, John. I see quite a lot of new faces here. So again, if you guys have any questions, please shout. I know webinars are boring. I used to attend a lot of webinars on FX Street and things like that. My attention span is only half an hour and then I'll fall asleep. But but this is recorded, okay? So if you think that you need a break, feel free to come back and watch the recording. Okay, so that's all for indices. I'm going to move on to FX right now. All right, let me take a 10-second pause and I'll be back talking about FX.